Welcome back, everyone. So, we have reached to our second topic of chapter 5 of the course Financial Products in Rural Market. So, the topic is structure of rural financial market. So, in this, we'll talk about the various segments of rural financial market. That is organized and unorganized, formal, informal, and also we'll talk about various banks available in rural areas and what are the services they provide. So let's get started with it. So the rural financial market has taken a different shape in nowadays. Like previously it wasn't that trustable and people didn't feel friendly in taking the services from financial market. So now the formal financial institutions are actively working to reduce the credit burden among the farmers, and the performance of the financial market is in the rural areas is now improving, and the range and quality of the financial services which are being offered are to the farmers are with lower income, and these services are friendly to them now. So, firstly, we'll talk about the rural financial market, which is divided into two segments, that is, organized or a formal system, and then unorganized and informal segment. So, talking about organized or the formal system, formal segment caters to borrowers having lesser risk as compared to the informal segment, and they serve as a purpose. So these are the major rural credit in the formal rural source of rural credit in the formal segment, that is cooperative credit societies. So they are regarded as the cheapest as well as an important source of credit in the rural areas. Then land development banks. So these banks, which are formerly known as the land mortgage bank, have been providing long term loan to farmers against their land mortgage at lower interest rate for over about 15 to 20 years now. And then commercial banks. So these banks have been accepting deposits from people in urban areas and providing loans to the industries and trade. So commercial banks are mostly famous in urban areas. And regional and rural banks, government set up network of regional rural banks for following into special needs of marginal and small farmers, and also rural artisans and the poor in rural areas, and the landless workers too. Then the government has provided long term and short term loan to farmers during emergency situations like famine and floods. So at the end, government is the only source of providing credit or any financial source. Then we'll come to unorganized informal segment. So informal financial market is legal, but it is not recorded officially. It is comprised of an unregulated financial activities which are outside orbit of officially regulated financial intermediary. So the facets of in informal sector is that commercial money lending by the traders, salaried employees, professional money lenders, or power brokers. These are the people who provide informal finance credit. Then arrangements among relatives, friends, and neighbors. So this is the most understandable source of informal sector of taking credit, and activities of self-help organizations. Then we'll talk about role of financial markets in this. uh, the uh, the role of financial market is that they contribute towards economic development, overall economic development of the country. Then they transfer the growing volume of purchasing uh, power, and also offer high quality financial services. Next, let's talk about the farmers' expectations from the financial systems. So, firstly, obtain sufficient purchasing power. So, they want the loan helps in increasing the purchasing power of the farmers, and then timely disbursement. So, the loan should be dispersed to the farmers within sufficient time. And easy loan procedure, yes, the procedure of for applying of loan should be simple and easy. Only then only farmers will be encouraged to apply the loan, and there should be lesser documentation work. And flexible loan procedure, um, the loan procedure should be flexible, so that people of the rural areas could plan and invest in the farm and non-farm activities. Then amortization schedule correspondence adequately with farmers cash flow. In this, what it means that the payment term and the amount should match with the cash flow of the farmers. Then long period loans. So the period should be longer. The loan period should be longer, so that the farmers could get some extra time in earning the money and repaying it through EMIs. So next we'll talk about the approaches towards financial rural finance. So there are two approach towards the rural finance. One is traditional conventional view, and next is market performance. So firstly we'll talk about traditional view. In this, the assumption in a traditional conventional view is two behaviors. So first is the borrower behavior, and the next is the uh, labor behavior. So we'll discuss about the borrower behavior. A common assumption is that the people in the rural areas are unable to save, and they would not give response to opportunities or incentives for savings. So most of the farmers require cheap loans and also supervision before they would adopt latest technologies and make major investment in farms. That the loans are utilized in the form of which is it guaranteed. Then lender behavior. The common assumption among the informal lender is that they are exploitative, and they charge such interest rate which result in large monopoly profit, which rural poor are not given formal loans, as formal institutions are risk averse. Then let's talk about the features of a traditional view of credit. So, firstly, it's financial viability, not a primary objective. It means that in design of specialized financial institutions, financial viability is not regarded as the prime objective. Then borrower domination. It is characterized by the borrower's domination, that all the operations, procedures, and practices are required to be geared towards borrower's interest. Then mistrusted the market. It means that the people in the rural areas require funds so that they could invest in their agriculture and non-agriculture activities. So there is a requirement that the product of credit is designed in such way that farmers are able to apply and get loans timely. So there is no requirement. There are requirements that could be fulfilled. Then minimize the loan of interest rate. The interest rate of loan in agriculture sector is required to be kept low so that the investment in agriculture sector is encouraged. Then high overhead costs. These credit programs which are supply led and the specialized institutions had not been viable financially as the overhead cost is high, and lower loan recovery. It means that the recovery of loan is lower in the rural areas. So these are the features of traditional view of credit. Next, let's talk about market performance. Uh, and It means that as compared to a traditional credit view, market performance view is view regards a good recovery of loan, and lower transaction cost in deposit mobilization and lending is there. Then increase in number of people who are having ready access towards financial services, that is both deposit and loans, and proportion of the total funding which could comes from the locally mobilized deposits as a main success criteria. Next, we'll talk about the characteristics of market performance view. So in this, the mobilization of domestic deposit and savings. So this view emphasizes that mobilization of deposits and services are strategic ingredient in building a healthy financial market. Then identification of the expected and unsubsidized interest rate is that the expected rate of interest is required to be identified in this. And reduction of transactional cost is that the approach emphasizes uh, a reduction of the transaction cost, and using cost and risk reducing innovation as a mean of supporting a sustainable flow of untargeted financial services. Then recognizing of importance of informal financial market, which means that informal financial market has different features, and it is very important to recognize the important feature according to the market. So this was the second topic of chapter 5. So we come to the end of the topic, and you have to do this activity in which you have to form a group of 4 to 5 students and select one financial student institution which forms a part of the rural financial market, and explain the ways this institutions help the people in rural areas. So I hope this topic was understandable, and please do the activity for further understanding. Thank you for joining.